Hello, and welcome to myfinanceteacher.org. Let's have a chat today in this video about precious metals, rates, and quickly on the stock markets. For more details, including the sentiment levels in precious metals and in stock markets, head over to myfinanceteacher.org and register to become a member. First, let's start looking at the 10-year bond rates. This is all the rage recently, and I think the rates affect both the precious metals as well as the general stock market. Higher rates make precious metals less attractive, as precious metals don't produce any sort of income, such as dividends produced by stocks or interest produced by bonds. However, this doesn't include inflation, and I think a correct way to look at the effect of rates on precious metals would be to look at real rates after inflation. We possibly might have a look at that in some future video. For now, let's have a look at these 10-year rates. What do I see on the daily chart is that the Bollinger Bands have already widened since the beginning of February. And the rates have already poked a few times. The rates have already poked 3 times above the relatively wide Bollinger Bands. This usually tells me that some sort of a cool down is coming. Another thing that I see on the daily chart is this divergence, the negative divergence between higher highs on the price and lower highs on RSI. Again, often, although not always, this also indicates some sort of a cool down. Looking at the weekly chart, what do I see is that the rates are now quite high. They're around 96% above the 50-week moving average. And looking back at history, the couple of previous times when the rates were pretty high above either 50 or even 200-week moving averages was back in October 2018, where the rates were around 43% above the 200-week moving average, and back in the end of 2016, in December 2016, the rates were around 43-44% above the 50-week moving average. What we see a few weeks or even a few months after that, the rates actually declined for quite a while after that. So what might happen over the next short term with the rates is, although there might be another couple of pokes above the Bollinger Bands over the next few days, over the next few weeks, I still expect rates to decline. That will help both precious metals and the general stock market, so let's jump into gold. About a couple of weeks ago, back in early March, gold gave us the daily cycle low, the end of that daily cycle, which lasted since mid-January. There is also a pretty good chance that this low will turn out to be the end of the intermediate cycle as well, which lasted since the very end of November. It's still questionable, though, if the intermediate cycle has actually finished, but I think there is a pretty good chance for that. So over the last couple of weeks, gold has rallied to retest a couple of resistance levels. Firstly, this resistance from the downtrend line that gold has respected since the very beginning of this year, 2021. And another resistance based on a couple of lows in late November as well as in mid-January. This resistance is somewhere around 1760. Although gold actually peaked at only 1756 yesterday, I think it came close enough to test both of these resistance levels. So after such a test of a couple of resistance levels, I think it would be only normal to expect gold to cool down for a little bit, take a breather, relax, before having enough strength, before pushing for the next resistance levels, possibly somewhere around that 50-day moving average, which possibly will come down to, say, 1770, 1780 by the time gold comes to test it. But if gold drops a bit too much here, if it comes relatively close to the recent low, then this might indicate that the ongoing intermediate cycle didn't actually finish here on the 8th of March, and that the intermediate cycle will give us another short-term daily cycle and the lower low sometime over the next few weeks. This second scenario of lower lows is, I think, a little bit less likely than a scenario where intermediate cycle did already finish, meaning that we are in a new intermediate cycle with a likely push back towards that $2,000 perhaps over the next couple of months. I would give the scenario of higher prices 60% chance and something like 40% chance to the scenario of lower lows. And another positive sign is on GDX. GDX is actually outperforming gold to the upside at the moment. GDX, as you see, is already near the 50-day moving average. Over the last couple of days, GDX actually tested that 50-day moving average and even poked a little bit above that, while gold is still a bit far below its 50-day moving average. So just as gold cools down perhaps over the next few days, I think GDX also will cool down from testing that 50-day moving average before breaking out to the next resistance level, which will be formed by this downtrend line connecting some of the recent highs. Perhaps that the next resistance level for GDX would be somewhere around $35. And again, if GDX comes back down into this support zone, that's somewhere between 31 to 32, there will be a chance that that support zone is going to be broken into the end of potentially still ongoing intermediate cycle in precious metals. So this is how I see the charts of precious metals. And for more details on market sentiment, check us out at myfinancesteacher.org. For now, let's move on to the general stock market, looking at S&P 500. Despite a bit of a red candle yesterday, I still think there is still a pretty good chance that the intermediate cycle in the general stock market did finish over here in early March, although that gives us a bit of a short cycle lasting for only 161 days. So as the rates are still relatively strong, perhaps S&P 500 comes down to retest the 20-day, maybe even the 50-day moving average before continuing the ongoing new short-term daily cycle and likely new intermediate cycle. So in the general stock market, we also have a couple of scenarios. The first scenario, which is I think less likely, perhaps a 40% chance, is that this intermediate cycle hasn't finished yet. The recent decline, after all, was a very modest decline. So perhaps we're going to see lower lows within this intermediate cycle, which will end at closer to an average duration of just over half a year. So that is a possibility. I think there is pretty good chance for that, say around 40% chance. But with ongoing money printing and with a lot of excitement potentially about the economies opening up soon, I think after retesting these 20 and 50-day moving averages, the general stock market is going to continue higher into the new intermediate cycle. I would give this scenario 60% chance. So this is the S&P 500. And what's more interesting is actually technologies. NASDAQ is what we're looking at, myfinancesteacher.org over here in this recent post. So if you want to have a look at that, again, you are more than welcome to join us by clicking this register button. So this nearly concludes the video. Let me leave you with the last question, which I actually got in one of the comments to one of my previous videos. One of the viewers asked if it's a good idea now to drop those miners, to sell the holdings in miners that you have, given that the rates are rising. I have already answered to that comment. You might check that out. But what do you think? Let me know in the comments below. And of course, remember to hit that like button, subscribe to the channel, and share this video with your friends. Have a pleasant Friday and good luck in your trades.